Oh yeah, welcome back to another episode of Cryptotawk. It's your host. I am Farid with Osman, and yeah, it's been about a week or two from our debut episode, right, Osman?
Yeah, it's been a little bit. We're back, ready to go.
Yeah, yeah. I mean, on the debut episode, we tried to like kick it off with the introduction to money, right? Right. Generally, we try to like break this whole discussion about the rise of cryptocurrency, the past, the present, and the future into three segments. And right now, the first
Absolutely.
episode we talked about the past, which was how we talked about money and all. Osman, can you basically just give us like a recap of what we talked about before we like going through the business of the day?
Yeah, sure thing. So we talked about the history of money and the birth of the barter system. And we explained all the historical contents behind it, how everything started with just a peer-to-peer transaction with people within the community. And we talked about the limitations of the barter system and how we had the double coincidence of once where if somebody had something that was not available to them, other problems arise. And pretty much, we started to get into the evolution of currency once we started talking about the
Paper money.
printing of paper money, correct? So that took, a little bit of time, but now we are starting to transition from those types of currency to today's type of currency, which is the fiat. And we are now going to explain to you guys, how money is ruling our world right now, and pretty much why essentially crypto came to be. So I guess we can start off that way.
Yeah, I mean, it's exciting how we kind of like take a look at how the whole gold standard led to like the paper money, whereas the current fiat system is no longer backed by gold, and that caused inflation, and that is actually what actually caused the emergence of crypto, or should I say Bitcoin now, because Bitcoin is basically the first, I would say, recognized crypto. So kicking it off today, we're going to be talking about like the emergence of crypto and how it's basically solved the issues of fiat system in terms of inflation and some other issues that comes with it, and challenges that we have right now with crypto. And probably in the next episode, we're going to be talking about the future of cryptocurrency. So yeah, kicking it off, I mean, flowing from our past discussion about our past discussion about how the whole challenges of fiat money in terms of inflation came by. It's been through the whole thing that happened in the US in regards to the 2008 financial crisis. I think, yeah, that was like a very crazy thing, right? I mean, I believe everybody should know about it. It was like it was like one big bust, right? So we just get to like basically try to like go a little bit into what caused the 2008 crisis and how it transitioned to the creation of Bitcoin in 2009 by someone called Satoshi Nakamoto. So yeah, when we look at what happened in 2008 and how that caused the financial crisis. So basically what happened in 2008 was, if the way the fiat system works is, since fiat is no longer backed by gold or by any hard currency, it was basically the government have to find a way to basically control the economy to make sure there's no inflation and there's no deflation. So what the government tries to do all the time is basically trying to like increase what is called interest rates or decrease what is called interest rates, right? So this means like once you have your dollar and there is like and inflation, everybody has money. All the Fed has to do is just to increase interest rates, which means you would not be able to whenever you try to borrow from the bank, you have to pay a lot of interest, and that's basically called inflation. It reduces borrowing and it reduces spending, right? And when you decreases, it increases spending. So basically, if you take a look back at the dot-com bubble, that was what happened when the dot-com burst. So the government had to step in to basically try to counter the recession by basically lowering the interest rates, right? So they lower the interest rates, so now people can basically borrow, and just to make sure the economy was up and running back. We're talking about the United States right now, and since the United States has the US dollar, which basically which is the reserve currency, right? So basically the bank basically had to take control, and you can basically borrow with a lower rate, and now that's with time actually got the economy up and running again. And what happened subsequently was, when now everybody has money, and now once the economy is up and running, if it's not controlled, it goes above the bar again, and everybody has money right now, and now the government has to come in. So what happened was, now everybody has money, and the S&P, the stock market was at all-time highs again. Everybody was running, and now since the economy was so good, the housing estates, actually the housing market was actually also very high. Everybody can basically get have access to housing, and basically you can go to the bank and lend and do this and do that. Now this caused what the bank thinks okay, then I can basically have what is called subprime mortgage, whereas they just without you having enough credit score on your card, they just basically give you the access to have mortgage, even though you may not be able to pay back, thinking that the housing market is basically very solid. Even if you default, they're just going to take this money back, this housing market, and basically set it off. But what happened is, once a person defaults, the next person defaults, almost everybody defaults, it causes what is called a bank run. And that was what happened in 2008. It caused what is called a bank run. And since you know that the banking system operates in a way whereas you are not mandated to basically you are not mandated to have it operates in what is called fractional reserve, right? You are not mandated to have all the user funds secured. You can basically just have a fraction of it at hand while you make use of other ones. Now, when what is called a bank run happened, everybody wanted their money. Everybody wanted to cash out of the housing market and the whole boom of the housing market at that point. And the banks basically could not pay everybody their money back. And that is what caused the 2008 financial crisis. So the economy went down badly because the bank defaulted to pay people their money. I mean, it was a very crazy thing, whereas you put your money in the bank and you just go there, and then your bank tells you they can't pay your money because they don't have it. So the government had to come in with different things that they do, with the whole fiat system, whereas all you have to do is to just turn on the printer and print some money, or just try to play around with the interest rate and all. So that was basically what caused the 2008 financial crisis. Now, when that happened, a group of person, or probably a person whom we did not know well, we just know him as Satoshi Nakamoto, just came on board and was okay, we need to find a solution to these banks basically playing with our money. Basically, we operate on a trust system. We have to trust the bank that this bank is not going to play with my money. They're not going to be lackadaisical with my money. But that is not what happened. They were just throwing money with leverages out. They are just throwing money here and there. So that caused the issue with Satoshi Nakamoto to actually think about, okay, let's bring about what is called a peer-to-peer network system, right? That this was what happened, and this was what brought about the whole concept of Bitcoin in 2009, right?
Right. Exactly. So, like just like how you were saying it, they had these subprime mortgages that caused this fervor in spending. And it's kind of weird when you think about it, because how are the banks allowed to just print money at a whim? They're saying, okay, well, just because we're able to, somebody comes and deposit $100, we can now take $90 from that $100 and loan it to somebody else with $10 in reserve. So obviously a system like that is going to crumble upon itself. And this is why we see the advent of crypto and the advent of Bitcoin. It was because, this government agency or the banks, they were centralized essentially.
Yeah.
And what Bitcoin brought into the ecosystem was an act of decentralization, where if we're talking about the ledger system, it's a transparent ledger system, and a lot of people didn't know about this back then until actually Satoshi Nakamoto brought this up on the white paper.
Yeah, I mean, just to actually bring a point right there, which I think a lot of people also don't know. A lot of people, contrary to like popular belief, a lot of people think that Bitcoin was actually the first digital currency, but then that was actually not true. I only just found out myself while doing some research not quite long ago that there was actually some trials to try to like get digital currency. There was this guy named 80s, and he actually created like the first digital currency money. Yeah. It was called DigiCash, right? And then I think subsequently they had some other ones like eGold, Ashcash, B-Money and all, but they all had the same issues that this fiat system had, which was centralization, and they couldn't solve the issue of double spending, right? But there comes Bitcoin with Satoshi Nakamoto. So you can from there.
Yeah, you're right. Bitcoin was not the first asset or money that came into play. When the .com era started, like you said, the digital currency was a thing of, it was in the talks, that people did try it out, but it never really panned out to anything. But based off of what happened, the real ideology behind Bitcoin was decentralization. We, as a people, could no longer trust a government entity with our finance. And as we said earlier, the dollar was removed from being backed by the gold standard because of inflexibility, and it was then used and abused in a sense during during the housing bubble, which led to the recession. So Satoshi Nakamoto was it's a legend. People are saying that it was one person. Some people are saying it was a group of people that came together and came up with a cryptography way of validating transactions through solving complex puzzles. So in the beginning, the software behind blockchain was based off of computers being able to process transactions through encrypted mathematical problems. And human beings cannot solve these problems, so it was based off of these computers who can do this, who can solve these problems. And that's how the trust was transferred from institution to nodes or computers that would be able to do these things for us. And every block that was made was validated by other blocks and nodes from other computers. So when this thing actually started validating itself, it completely removed the need for human beings to actually take hold and validate anything. And it became an openly transferable system.
Yeah, absolutely. I mean, that's the whole gist about Bitcoin. It operates on what you just basically described. I think the technical term for it in the crypto space and the blockchain space is called proof of work consensus mechanism, right? So it basically entails a system whereas different people around the world, we don't actually have to trust a central authority, right? That was the whole gist around what Satoshi Nakamoto was trying to build. He's trying to build a peer-to-peer electronic cash system, whereas I don't need the bank to serve as an intermediary before I can basically send money to someone else, right? So that was how it was being done, and the whole gist about how it was being effected to avoid other problems that might come with double spending and all other things that come with digital currency that made all other trials to not work was solved by the whole proof of work consensus mechanism, whereas you can't actually have double spending because of when transactions goes into the mempool, it doesn't get confirmed, and each block comes after the other one. That is why it's called the blockchain, right? So you can't basically have you can't actually spend the money at the same time. You can't send money to me, send money to another person, and it works out. One of the transactions is going to get failed, right? Because there are computers all over the world, there are miners all over the world who basically take charge and make sure that they don't basically approve any transaction twice, right? Because there are penalties to that.
Correct.
And we're going to talk about other consensus mechanisms like proof of stake, and what have you. But it's worthy to note that when the Bitcoin, early days of Bitcoin, where there were actually no exchanges like you have today, the Binances of today, the Bybit of today, and all these exchanges were not available that time. What was that? Was just you mining your Bitcoin and probably you transferring your Bitcoin to another person. There was actually no sophisticated exchange, and the first transaction that actually came on board for Bitcoin was done in 2010, and I mean that it's something that actually now gets celebrated every year. It's this Laszlo guy who basically used 10,000 Bitcoins to get about 2 pizzas, right? That was very hilarious. Yeah, I mean it's very hilarious. It's something that come about every year and people just laugh it off. But I mean, it's basically the groundbreaking system for us. It's basically the first transaction, and subsequently we had exchanges that come and go. We had like Magogs that came in 2011 and basically had a hack in 2014 or thereabout, losing about 740,000 Bitcoin. These are basically transpired over the years. But one thing that is worth noting is Bitcoin came and has been growing. Over the years, and have issues that came with the fiat system. One of the major issues that came with the fiat system was trust and inflation, which is linked to supply. But then with Bitcoin, there came a fixed supply of 21 million Bitcoins, right? So there's just 21 million Bitcoins that can be mined. It can't be more than 21 million Bitcoins that can be mined, and about 19 to 20 million of that is already mined now. About 90 million, I guess, already mined, and that's why we have something called the halving almost every 4 years, whereas the mining of Bitcoin actually cuts into half, meaning the supply cuts into half every 4 years. So you now have these assets, which it's basically an ad asset, just like we have gold. And you can actually now argue that Bitcoin is even a more scarce asset compared to gold, because gold is actually doesn't even have a finite supply. It's an infinite supply. It's just very scarce to have. But with Bitcoin, it's just 31 million of it. So that is why people actually call Bitcoin digital gold, right?
Right. And this was recent, right? It was recent that it actually became a higher asset class than gold, right?
Yeah, I mean, when you call it asset class, I mean it's another issue that we face. The whole regulatory compliance have not actually named it an asset class, but I mean it's recently looking at the halving of Bitcoin. Now it's even more scarce as to Bitcoin, but then Bitcoin has always had a supply of 21 million. Why gold doesn't even have a finite supply?
Right. Okay. And when it comes to mining, how can you explain a little bit how the mining process works? I know there's after every 10 minutes there's a certain amount of Bitcoin that is mined by these computers, right?
Yeah, absolutely. So the throughput of the Bitcoin network is about 10 minutes, and which means you get about 10 minutes to basically every network. You need the hash power of your mining facility has to be very strong, that if you don't actually get the solutions to this mathematical problem like you earlier, whoever gets to actually get the answer, the solution to this problem, actually gets to get the reward for processing that transaction. So this means every miner all around the world basically fights to make sure that they get to mine the next block. That's why it's called blockchain. If you get to like profile a solution to this, you get to mine the next block. So it means you have to make sure that your hash power is very high for you to actually be able to like mine and to be able to like confirm transactions on the blockchain network and basically pass it on and actually mine the second block. So if this is not possible, you probably will not be able to like mine. So it's basically a very competitive landscape, and the more Bitcoin that we have, the more miners that we have, the more like the more tasking it gets to actually mine Bitcoins, and that's also solidify the whole supply
value
chunk of Bitcoin.
Yeah, and it's funny because like how you said it, when the average person before in the beginning was able to mine Bitcoins from his or her computer, and as the demand for it went up and the value of the Bitcoin being mined increased, you started to see a lot more competition. Like you said, people actually started, coming out with a GPU, these graphic processing units that would solve these puzzles or these problems very, very quickly. And the quicker you're able to solve them, the better chance you're able to reap the rewards of these puzzles every 10 minutes. So, like you said, it became a very competitive landscape. And one thing I wanted to, bring about that, talk about was based on the fact that, people started getting really into it. They started like buying huge rigs, getting these warehouses, these data mining centers. How did it affect the energy consumption and the environmental impact?
Yeah. I mean, that's something that actually caused a lot of concerns for the government had to like use this as an excuse to say, oh, Bitcoin is actually uses unclean energy. It uses and which was a fact. I mean, Bitcoin actually mining operations all over the world actually consumes more than a country's energy consumption, and that was like really wild. And that was when about 2020, when Elon Musk, Tesla, came about to actually start accepting Bitcoin. It was not so far off after that announcement that it said it was not going to accept Bitcoin again because of the unclean energy that Bitcoin uses. So this means that Bitcoin actually consumes a lot of energy that can be used for better better things. But however, I mean, you can't just say, okay, Bitcoin consumes a lot of energy, because Bitcoin is actually profiling something even great, or even greater for it, right? So it's not like
Absolutely.
Bitcoin is consuming energy for a useless thing, because even banks all over the world consume a lot of energy, and you don't actually see people going about saying that banks
Exactly.
consume a lot of energies, right? But however, like subsequently, as we grow from there, we've seen Bitcoin actually uses more clean and more green energy. Talk about coal energy and some other energy that should actually be waste energy in terms of like probably some leftover energy from households and things like that, are now being converted and used in mining rigs. And now about, I think, the green energy or that Bitcoin consumes have actually now passed, if it's not close to about 50%, because I know that Elon Musk said if the green energy that Bitcoin actually consumes reaches a particular threshold, is going to like start accepting Bitcoin again for Tesla payments. But I mean, we've not had that, but Bitcoin has actually really, really developed to actually consume a lot of like green energy, and that is not the whole talk about Bitcoin consumes a lot of like energy, a lot of like good energy and things like that is not a talk again, right?
Yeah, I wouldn't say it wouldn't be so much of a concern as it was before, like how, the traditional economy tried to make it. And what's interesting too, I would like to see one of these days, maybe I might do a little background research to see or compare the printing of dollar and fiat currency and the amount of energy that takes compared to the mining of Bitcoin. And we'll try to see, if we can probably get a little bit of an idea and see what it is side by side. Also, one thing that came from the proof of work mechanism was the proof of stake, which was another way to kind of alleviate the burden off of the proof of work scale, right?
Yeah, absolutely. So like we said, the whole thing about consensus mechanism, which was the proof of work thing, is peculiar to Bitcoin. And then just flowing from Bitcoin, there came a particular young, slim guy, right? I mean, I think he's Russian. It's called, I think you know that already, Vitalik. So Vitalik Buterin was actually he's actually the founder of what's it called, of Ethereum. So what he did is basically tried to like look at Bitcoin, and Bitcoin is basically more of a peer-to-peer network system, right? Trying to replace the bank by being able to send money to another person. But Vitalik tried to like look into, okay, if Bitcoin is trying to like, if you're trying to like replace the bank, we can't just replace the bank by facilitating sending of money alone. The banks does way beyond that. The banks try to like have things like, insurance, things, ending. Then how can we be able to like do this in a way that, in a trustless manner? And that was what bring about the whole concept of smart contracts, right? So Vitalik tried to like create a blockchain that enables smart contracts. This blockchain enables you to like build smart contracts on it and build decentralized applications in which that you don't need a centralized authority to actually be in this system, right? So that is done. And this blockchain, which is the Ethereum network, was built on what is called, it was initially built on proof of work until about recently, when it actually transitioned into a proof of stake mechanism, a consensus mechanism, and I think that was when we had like the Ethereum merge, things like that. So the whole concept of proof of stake means you don't actually have to like, it doesn't operate in the sense of that you need like miners and a lot of like mining rigs that consumes a lot of energies. All you have to do is to have your computer and be able to like delegate certain Ethereum, right? Certain Ethereum, it has a threshold that you have to like delegate to actually be a validator on the blockchain. You being a validator, you confirm a lot of like transactions, and when you confirm transactions, the transactions it goes into the mempool before it is done. If you actually do anything shady, the money that you staked, right? The Ethereum that you staked, which will get slashed as a punishment. Nobody wants to lose their whole hard-earned money for tokens trying to like be manipulative on the blockchain. So that is the whole concept of proof of stake. So you stake your money, and if you do anything shady, your money gets slashed. That is the punishment for it, right? So it's an alternative to basically to proof of work, and that is basically what's
so I mean, it definitely incentivizes you to be a good actor in the space. Like you said, these smart contracts, they enable these programmable, self-executing financial agreements without any intermediaries. And I think, which is interesting, the blockchain, in fact, was very, very, it became a very influential thing to the whole global economy, especially when it comes to supply chain management, right?
Yeah.
We're talking about how it improved the transparency of recording every transaction, the movements of goods and tampering of, resistant ledger. All of those things became very transparent and open for everybody to be able to trust each other without having to actually worry about any type of centralized entity. And actually, I think it brought about this digital identity. I think users now have more control over their personal information because of the blockchain.
I mean, those are like the pros of decentralization. And when we try to like compare cryptocurrencies and the traditional currencies or the traditional economy, right? So we have things like, with the advent of crypto, with the advent of Bitcoin, with the advent of Ethereum and other cryptocurrencies, right? We now have like a limited supply as opposed to like fiat system. In the fiat system, you can just print more money, pam, and then you print a lot of money. But then with Bitcoin, there's already a fixed supply. So there's already a limited supply, and it curbs inflation in a way, right? And then when you take a look at some other pros to like cryptocurrencies, when we compare it with fiat system, cryptocurrency also have like this universally trading feature, right? Whereas if I want to send Bitcoin to you right now in Sierra Leone, I can basically just send it with a click of a button with as much cheap fees as I can. Whereas if I want to like with my fiat money, I have to like go through a lot of like bureaucracy with cross-border payments and all. So these are like part of like the pros that comes with it. Another thing was like with cryptocurrencies, there's like less manipulation because everything operates on a public verifiable block ledger, right? So everything is publicly verifiable. There's less manipulation. However, if you actually take a look at it with fiat system, local banks and the central banks have all the information. It's a private ledger, whereas they can we have to like trust that they don't do anything shady. But with Bitcoin, everything is open. I can basically go on the block explorer and verify that this money has been sent to me, things like that. Another thing is, it's way cheaper. It's way cheaper. If I want to like basically send Bitcoin to you right now, and I can basically send it with just a fraction of fee. And there are also like way cheaper blockchains like the Tron network and all of that network that are way cheap and cost me like penny on the dollar to actually send a lot of money, millions of dollars. So there's a lot of like pros that comes with cryptocurrencies when you try to like compare it to fiat. It comes with like a pseudonymous identity, whereas all you can know about me is my wallet address. I don't need to give all my informations to you before you can basically send me money or do or facilitate any money. And there's not even any facilitator, right? So these are like the pros that comes with cryptocurrencies. But then we've talked about Bitcoin, we've talked about Ethereum, but it's worthy to know that like the whole like crypto thing doesn't end with Bitcoin and Ethereum. There's still like a lot of like cryptocurrencies. So there are a lot of cryptocurrencies that came, and especially with the advent of Ethereum, we have cryptocurrencies like Aave, Compound, Maker, Uniswap, and all these type of cryptocurrencies that like tries to like operate like the bank. when we're talking about borrowing and lending, that is when we have the concept of Aave. I think Aave was initially called ETHLend around the ICO times in 2017, and it came around to actually facilitate borrowing and lending on chain. Meaning that if I want to like borrow money from you, or I want to like lend money, I can basically do it on chain also with smart contracts, right? So I just have to like basically, but the whole thing is just that with crypto, it's over collateralized as opposed to like the fiat system, whereas I can basically, if you take a look at it also, it's still over collateralized with the fiat system. Most of the time, if I want to like borrow, like let's say I want to borrow $1 million, I probably would have to like in a traditional system, I probably would like probably put my house down as collateral, and my house is probably worth $1.5 million, so it's still over collateralized. So with cryptocurrency also, if I want to like borrow, like let's for example, I want to borrow $100, I want to borrow $80, I have to like, and I don't want to sell my Ethereum, I can basically deposit my Ethereum on the smart contract, and then I can borrow like USDT, which is like a stable coin from this protocol from another person that has also deposited his stable coin, and my Ethereum will be the collateral. My $100 worth of Ethereum is the collateral, and I can take the $80 worth of USDT and go and probably long a particular coin on futures. So these are like some things that came with, we've had like all other protocols that came and other cryptocurrencies that came that kind of like talk about insurance, borrowing and lending. We have things called layer ones, just like Ethereum. We had other layer ones like Solana, and a lot of cryptocurrencies, right?
Yeah, and funny thing is, just to give a little bit of an update, right now we currently have 22,932 types of cryptocurrencies out there, which total market capitalization of $1.1 trillion. So yeah, it's actually growing pretty large.
Yeah, and that is even those that are being tracked by the popular tracking. Yeah, the coin market cap.
Yeah, coin market cap, according to Coin.
There's million types of coins that you probably don't know and we probably have not heard about. So it's actually nice with the whole market cap of the crypto markets. I think during the last bull run, I think it reached about $2 trillion or more. But right now we're back down and we try grinding up. So it's something that is crazy. But then I think with all these old saga about Bitcoin, about crypto, about all these innovations that the cryptocurrency has bring, it has created what is called mainstream adoption, right? If you go on, especially most of countries like United States, countries like Nigeria, countries like Kenya, countries like the Philippines, countries like Indonesia, cryptocurrencies are, especially developing countries, cryptocurrencies are like already very dominant because of what they do, because of how they offset poverty, because of how they offset inflations in the economy and things, and that's caused a lot of like mainstream adoption. Now we have like a lot of big corporations and a lot of like financial institutions now gravitating towards cryptocurrency. We already see the likes of Tesla, Archivist, Grayscale, and BlackRock, and of course MicroStrategy. I like to hear Michael Saylor talk about how, what's this thing he used to say about Bitcoin? He used to say, I forgot his particular phrase. He used to say, there's no second best, right? With Bitcoin, there's no second best. So he kept on rising. Right now, I think he's already like over about $1.5 billion in profit on his Bitcoin price. So yeah,
actually 2.3 billion.
What is it?
The last time I checked, they said 2.3 billion.
That's like crazy. That's like very, very, very crazy. That's
yeah.
And that's
really
what happens when you have a lot of conviction in a particular asset that you just like double down, right?
Right.
Yeah, you want to talk a little bit about the mainstream adoption and how cryptocurrency has grown over time to like get adopted in a lot of countries by individuals, by corporations?
Yeah, you see countries like El Salvador, Central Africa as their legal tender, and it's for good reason. When you're talking about a country like El Salvador, where there was no trust in the government at all, they started to distrust the system would be the best approach. The money was not worth anything anymore, and when they did bring on Bitcoin, they've actually seen gains in their economy, in their portfolio, and their investment portfolio, and it's actually helped. Same thing with Central African Republic and certain other South American countries. I think Chile and Argentina also have a level of adoption. I'm not sure if it's national adoption, but I do know that they're very open to the Bitcoin specifically and the crypto assets. But I think global adoption for cryptocurrency is inevitable. We're starting to see it now even in the Islamic countries, where before people did not believe that something like cryptocurrency would be permissible to use, but now you're starting to see like countries like United Arab Emirates and other countries within the MENA region are embracing crypto. And it's like, again, it's for the same reason why everybody wants to get a piece of it. It's because you don't have to trust a centralized entity. You just have to trust that that the system is governing itself. Just like how the internet works, we have everywhere people are collecting and sharing information. The same way how cryptocurrency allows you now to transfer value amongst each other without any intermediaries.
Absolutely. I mean, a popular quote in the crypto space is, in crypto, you trust the code, right? So you don't basically trust the person, you trust the code. So, I mean, it's amazing. It's amazing. And when we take a look at it, just to like basically add to what you just said, prior to like 2022, 2020, prior to 2020, let me say that we never had like any big corporations. We never had big financial institutions want to like come forward and support Bitcoin. We even had like banks like JP Morgan, Chase, and all of them just talk about how Bitcoin is like a scam, it's a Ponzi, it's this, it's that. But right now, everybody's gravitating towards it, and we have one of the biggest investment banks, which is like custodial BlackRock. They're already filing for ETFs, and we have like lots of ETFs that will probably get accepted in January 2024. I believe it should get accepted in January 2024. There's BlackRock. I mean, BlackRock has about 517 ETF applications, and 516 has been approved. So I mean, there's no gainsaying that most likely their ETF application is probably going to get approved. And we have like a lot of like other ones like Grayscale trying to like convert the funds to like ETFs. We have ARK Invest. We have lots of them trying to like file for an ETF. This just shows how much like big corporations are gravitating towards crypto, and there's way mass adoption. I mean, just think about when BlackRock ETF is accepted. Now think about a lot of people who would actually want their 401k to include Bitcoin, right? So now everybody can have Bitcoin as part of their retirement plan.
Exactly, which is a huge thing, because now you're literally trickling it into the mainstream media, in the mainstream portfolio, where people are now, they actually have access to, new holders now can actually have access to Bitcoin and the crypto market, which is going to see a lot of new money coming into the industry.
Yeah, absolutely. So just for first, before we kind of like round it up, I wanted to like basically take a look at some regulatory challenges that we've had with Bitcoin, with crypto in general. I mean, regulations are something that, I mean, it's basically, or in a grand scheme of things, very positive, but over-regulation actually kills innovations. And we've had like a lot of like regulatory challenges, especially with lack of clarity with cryptocurrency. Now, like about 2022, we saw a lot of like is big companies went down. We saw FTX, we saw Celsius, we saw just a lot of them actually went down. And just about a few weeks ago, we saw Binance also like had the CEO plead guilty to to charges by the United States, and these are things that is possible because there is no regulatory clarity, right? So we want to talk a little bit about regulatory challenges that affect the crypto industry.
Yeah. So, like what you said about seizing Binance, he pled guilty to anti-money laundering violations, and some of this was that he was operating in countries, especially in the United States, where he would collect dollars from users without actually having any type of regulatory license to do so. Cryptocurrencies, most of them are considered securities, and they should be governed by what the SEC, the Securities Exchange Commission, they have to regulate it. They need to know who's using the money, how the money is flowing. And so there's these things called KYC measures that needs to be in place. Now, not only CZ Binance, we also have issues in the past with FTX, Sam Bankman-Fried. I'm sure you heard in the news lately. He ran this company, this exchange, a major exchange, FTX, and again, he was operating outside of the laws of the United States. Now, when you're talking about jurisdictional variations, the lack of international consensus on regulatory standards can complicate, things like cross-border transactions and compliance. One of that crypto actually have as a challenge is the market integrity. Cryptocurrency, things like cryptocurrency exchanges, they lack transparency, and so they end up having some regulatory oversight. And it's interesting because when you BlackRock and their ETF, I think we're in a better place when it comes to getting it approved, but I think that there's a little bit more cleaning up that has to be done. Like, for instance, another player that's looking at, I think another thing that the government is actually going after is stable coins. We're talking about like things like USDT. Now, the people in USDT claim to have, to back all the United States dollar that they use as one-to-one with the actual cryptocurrency stablecoin, and that needs to be proven. So some companies like Tether, USDT, that will have to be regulated before, in my opinion, before BlackRock's ETF get approved. And I think once there is some type of regulatory framework behind that, I think we're going to be looking at a better playing field and a more lucrative one when it comes to these regulations.
Yeah, absolutely. I mean, it's something that is right now needed, right? Regulatory clarity is something that we lack, and something that the whole crypto community have been clamoring for, right? We need regulatory clarity. about and say you are breaking a rule when there is no actual rule to be broken, right? So this is what the United States does, and this is what a lot of like crypto people have been trying to like talk against. When you take a look at the SEC chairman Gary Gensler, when he's been hacked, okay, is this asset a security? Is not going to basically give a direct answer. When the Congress talk about, okay, is Ethereum a security? It's probably not going to say, okay, this is a security, this is not a security. And the commodities agency in the United States has also claimed that Ethereum, Bitcoins, they are commodities. There is already like an overlap when it comes to like agencies regulating digital currencies, digital assets in the United States. Some claim this is a commodity, some claim this is a security. Now, if you're claiming that this is a security and this is a commodity, now how is the average Joe supposed to know how to basically operate with a particular asset, or an asset even name it to be a particular asset class, right? So this is one of the issues that we try to like solve in the cryptocurrency space. We need like real regulatory clarity, because without a law, there's no law to be broken. So that is one thing I think, John, just like you've said, with regards to like Theta, with regards to like a lot of like exchanges, there needs to like be clarity, there needs to like be a cleaning up before we can see like the real mass adoption, before like big countries, big institutions, big hedge funds flock into the crypto space. They need clarity. They need to know that, okay, this that I'm going into, I won't get into it, and the next few days, the next few weeks, the next few months, I get the SEC on my back asking me for $1 billion in fine. So I mean, that is amazing. I think right now we've been able to like establish how cryptocurrency come to be, the technology that supports cryptocurrency. Talking about Bitcoin, talking about Ethereum, talking about proof of stake and proof of work. We've talked about how decentralized and compare cryptocurrencies to the fiat system, and how cryptocurrencies kind of like solve a lot of like issues or that comes with the fiat systems, and talk about how crypto is not just this peer-to-peer network system, but it has grown to be a full financial kind of like a financial institution in the way that it offers, borrowing and lending and a lot of like other services that the banks offers. So I mean, it would be nice to basically kick it up and basically put things.
Yeah, we talked about quite a lot.
Yeah, I mean, it's quite a lot. And probably we still have a lot to talk about when we talk about the future of crypto. Where do we see crypto in the next 5 years and the next 10 years? In the next 20 years, do we see crypto revolutionizing the whole, not only probably the financial system and even beyond that? So a lot of about, but I mean, because of time, we don't want this podcast to be too long. So we're just probably going to like take a look at that next week, and we'll probably try to like cut it off a day. So do you have anything to basically want to like say to the audience?
So I mean, like you said, we have a lot. Still have a lot to cover. There's a lot of nuances in what we talked about today, and things that we're going to actually revisit in the future. And so, if you guys really like our, what we talked about today, please, let us know in the comments. Let us, follow us on Twitter, and we're going to be, bringing out more content out to you guys. Again, what we say, we don't really talk much about financial. We're not giving any financial advice in here. So we just talk, just two guys chatting about cryptocurrency and how it's changing the world.
Yeah, absolutely. And definitely make sure you basically drop a comment at the footnotes of whatever you're listening to these, whatever platform you're listening to this podcast, Apple Podcast, Google Podcast, Spotify, whatever you're using. Just make sure you like drop your opinion, contribute to the talk about some things that we'll talk about, and what you feel about the podcast overall. And definitely we'll be back again next week. Do have a great week and catch you on.
Take care, guys.